Welcome to the Planet MicroCap Showcase Vancouver. I'm your host, Robert Kraft, and thank you all for joining us. I'd like to introduce our next virtual presentation here at the event. It's from the team at Sabio Holdings. It's a publicly traded company. I got two symbols for you, SBIO on the TSX Venture and SABOF on the OTCQX. And giving that presentation from Sabio is founder and CEO Aziz Rahimtullah, as well as CFO Sajid Premji. And with that, gentlemen, take it away.
Great. Thank you, Robert, for having us. Excited to be here. Sabio Holdings is a high-growth and profitable ad tech company. Full year 2022 revenue was up 75% to $42.3 million. That's the third straight year of EBITDA being adjusted EBITDA positive. And first half 2023, we also delivered revenue up 13%. And what we do is we're in the streaming space. We're a leader in the end-to-end technology in the ad-supported CTV, which is connected TV, and OTT, over-the-top streaming space. In Q2 23, CTV OTT revenues for Sabio were up 57%, and that segment grew to $5 million. And we work with blue chip customers like Amazon, GM, Ford, McDonald's, Starbucks, to name a few. In addition, we have strong relationships with both the brands and agencies. And finally, we have an incredibly experienced ad tech team across 170 years of experience. We're 120 strong across US, Canada, UK, and India. And to understand the space we're in, you have to really understand cord cutting. And I think everyone understands it because most people do not want to pay cable bills. And so what linear TV's experience is cord cutting because it's expensive for subscribers, it's inaccessible for creators, it's poor analytics, and it's hard to monetize. And that's what connected TV is providing, and the solution is providing to the marketplace. It's providing free content that's available. You only need a Wi-Fi and a cable-ready TV. It's accessible for creators. It's advanced analytics. And finally, it's easier monetization. And the numbers prove it out. As you could see, cord cutting continues to accelerate. It's not decelerating. People are not waking up in the morning and saying they love their cable bill and they're getting a lot of value for what they're watching on TV. They're cutting the cord and they're using their Wi-Fi to get the content and entertainment they need. 62 million households are now, this year, pay TV will decline 3.6% this year to 62 million households. So that number continues to decrease. And at some point by 2026, we will have more CTV, more Sabio TV households in our 55 million household print, which I'll talk about in a few slides, than there are available TVs in TV households. So that number continues to increase. And what's happening is as the amount of cord cutting increases, so does the eyeballs and the percentage of time spent on other platforms. And as you could see, the time spent on cable and broadcast continues to shrink while time on streaming continues to grow. It's also having an effect on an age basis. Gen Zers and Gen Y consumers are more likely to be watching streaming channels than they are on traditional TV. And that's where a lot of the cord cutting is taking place. And it's also a really diverse audience. And a company like Sabio, which means wise or experienced in Spanish, is uniquely positioned not only to benefit from the cord cutting that is taking place, but to understand the diverse audiences that are consuming the content on connected TV. And it also, for the first time, has surpassed time spent on other platforms. And that number just continues to grow. Streaming TV is the future of content consumption. And where their eyeballs move, so do ad dollars. And as you could see, we're in the early stages of this revolution, and Sabio is uniquely positioned to benefit from it. There are more cord cutters now in the US than there are paid TV subscribers. And that's what Sabio is positioned to do. Take advantage of this unique opportunity. Our three different products, including Sabio, which is our direct to access that allows our brands and agencies to access content creators via our platform. That's Sabio, and we work with brands and agencies to reach and help them reach targeted audiences. We have App Science, which is our analytics and insights capability that allows brands and agencies to understand the audiences more effectively than they're reaching. And finally, we have Vidillion, which is a platform that allows us to further monetize inventory, as well as work with content creators to launch apps and provide unique value to that as well, unique value to the ecosystem as well. These three companies combined create the most complete end-to-end tech stack in one of the most complete end-to-end tech stacks in the CTV OTT space today. What also differentiates us is this unique household graph. We're able to take 280 million mobile IDs that flow through our system every month, connect those to 110 million CTV households to get a rich 55 million validated household home print. Now, if you could imagine, if you were an advertiser or you're a brand, let's say someone like McDonald's, who's interested in not only running targeted campaign ads, but better understanding the audiences you're reaching, App Science and Sabio is a solution. And that's exactly why we're working with some of the top brands in the US. Brands like Toyota, Wells Fargo, Home Depot, just to name a few. I'm going to now hand it over to our CFO, Sajid Premji, to talk about our business execution.
Thanks, Aziz. As Aziz had talked about on the face of the presentation, we grew our 2022 sales up 75% to 42.3 million US. And that growth has continued on in 2023. Year to date, our sales are up 13%. In the second quarter alone, our sales are up 11% to $8 million US for $7.2 million in the year before. That growth is led by CTV OTT streaming as we continue to outpace the industry average of 21%. Our CTV OTT sales in the first half of the year grew 59% and 57% in the second quarter alone. For quarter two, CTV OTT represented 62% of our overall sales mix. Furthermore, 74% of our sales in the first half of the year came from repeat customers. This is up from 55% in 2021 and 72% in 2022. Going over to the next slide, on a trailing 12-month basis, we have grown as a company to the point that we're now CTV OTT is our dominant category in our sales mix. On a trailing 12-month basis, CTV was 64% of our overall sales mix, up from 44% in the year before. And during that span, we've seen a 50% increase in our average deal size. All this said, on a trailing 12-month basis, we are now at a point where we have close to 45 million US in sales, while we are trading on a market capitalization of only $18 million US. This is a very compelling discount, and this is would be one that perhaps would make sense if we were a company that was declining in sales, declining in profitability, but that's not the case. So if you look at our actual sales, they continue to increase. Our gross margins have held steady at 60%, and we've been even profitable for 3 consecutive years. Currently, insiders own 64% of the company. We are covered by 4 different analysts: Beacon Securities, A Capital, Industrial Alliance, and Paradigm Capital. All 4 analysts have buy ratings on our stock. And we have an enterprise value of $23.5 million US, compared to our 12-month sales of close to 45 million.
In our board, thank you, Sajid. And we have an incredible board. Our board includes Paula Madison, former GE officer, owner of the LA Sparks; Carl Farrell, former chief revenue officer of SAAS Institute; Jennifer Cablaquento, former CFO of the Golden State Warriors NBA basketball team and 2K Gaming, and most recently at Empire. And now also Moaz Karaj, which is managing director at Focal Point Ventures. And we have an incredible group of people across the world, 130 people strong in the US and all these locations, including Canada and India. So we have the right team, we're strategically positioned, And finally, we are the leaders in ad tech and in connected TV and are positioned accordingly to take advantage of the growth, not only in streaming and OTT, but the growth that diverse audiences pose. Thank you.
All right. Thank you guys very much for your presentation here today. And if possible, can we go back to that last slide to keep the, yeah,
Sure.
Perfect. Let's just keep that up for some of the questions here. So, you know, Aziz, I've known you for a couple of years now. We've done some interviews over the years and talking about Sabio and learning a little bit more about the business. You know, one thing in my conversations with you that's cut through that I'd love for you to explain a little bit more is about the advertising network that you've built over your years of experience and how that's contributed to that side of the business that's fueled some of the growth. So can you speak to that a little bit?
Yeah, that's a great point, Robert. And especially in the current economic climate, what's important for brands and agencies is to help them identify the right consumers effectively, efficiently. What's also important for the folks who are actually producing content is to get paid, because that's how the ecosystem works. And so we built a comprehensive platform that allows us to connect the two worlds seamlessly. And we built that tech. We didn't acquire it. We built it from the ground up. And, you know, with the exception of one acquisition we did last year, all of the tech we have built has been organic. And by the way, 98% of the revenue we have delivered and the growth we've delivered has been organic. And we failed to mention that. So the efficiency of our network and what in the tech that we've built and our tech stack, combined with our relationships and our understanding of the marketplace, has not only allowed us to fuel the growth, but it's also allowed us to maintain margins in a challenging environment.
Absolutely. Have to ask right now, look, we're in LA, the strikes are going on, both SAG and also the writer strike. Has that had any kind of material effect on the business?
Yeah, you know what? Unfortunately, that has, and there has been some effects with also in general in terms of the economic conditions that are taking place. Having said that, we see this as an opportunity to continue getting market share. And so we're very uniquely positioned in the marketplace to continue growing our CTV and OTT business. But we're also, you know, we are mindful and we are part of this wider economic challenging times that we are seeing some challenges there, but we do believe we're uniquely positioned to continue to grow.
Absolutely. I mean, at the end of the day, there will be, it will be over, right? It's not going to go on forever, you know? So it's just a matter of kind of like, it's more, you see it more of like a short-term risk.
That's right. Sajid, anything you want to add to that?
Yeah, I think in general, you know, there is a bit of economic uncertainty out there in the marketplace, but I think that it's important to realize that all these challenges are very short-term in nature. We still have a very big opportunity ahead of us. We're in a growing industry that's growing at 21%. As I kind of mentioned, we are growing our CTV sales at the first half of the year at 59%. So we are outpacing those industry averages and grabbing market share. And I think that, you know, heading into 2024, we saw a big boom to our top line and bottom line in 2022 during the midterm elections. And now 2024 is going to be a presidential election year. And so we see a big opportunity in the year to come. And we are very, very well positioned for that.
So another question I have for you guys, you know, what would you say is that main value prop? You know, why are advertisers saying, all right, I'd rather work with Sabio than, you know, any one of the companies that you listed on the valuation slide when you're comparing Sabio to some of the others?
Yeah, great question. We are it's our tech stack. So we have efficiencies that we've gained from a pricing perspective. And then separately from that, it's the analytics that we provide through our App Science subsidiary and the better understanding. Because look, when you go in and, you know, use anyone's case, if you go into Starbucks and you're paying more for that same coffee, you want to get value from it. You want to make sure that that coffee represents everything you expect it to be. And that's no different from advertisers. What we're providing the advertisers is the ability to cut through some of this, you know, questionable information and say to them, here's where we can prove out this is effective. Not only just using our platform, but other, you know, when they run on other platforms. And I think that's what really differentiates us is to make that advertising more accountable and help them understand that, you know, where are the efficiencies? How could we, an example of that, we were able to show a major automaker that, you know, one of their last campaigns didn't yield as much as efficient as a turnout in terms of reaching the right audiences as it could have. And that if they moved a few different things around, they could have actually increased their efficiency score for that campaign. And so that's really what is separating us from from companies who just simply sell advertising, who don't provide any deeper insights and analytics.
Very good. All right. So my final question then for you guys here today, from what you can tell us, looking forward a little bit here for the rest of 2023 going into 2024, what would you say are some of the drivers of future growth for the business?
Future growth of the business is really driven by the efficiencies we're benefiting from this tech stack that we have. And so if you can imagine, we're in a position now today because of the acquisition that we did with Vidillion, which allows us to have some end-to-end technology. We're not only in a position to provide services to content creators, we're in a position to get better margins because they're now integrated with us directly. That allows us to do rev share deals with them. That allows us to then take them to different advertisers and agencies and connect the dots and maintain our margins. So efficient tech stack is critical to growth in a when you don't have all the tools that some of our competitors don't have, they have to pay fees to everyone else to get to where we get to from a product perspective. Since we own so much of that actual ecosystem chain, we can control our costs and really kind of manage that. So that really is, I believe, we're uniquely positioned in that CTV OTT space with a comprehensive tech stack that allows us to gain efficiencies across that full ecosystem. Sajid, anything you want to add to that?
No, I think that was well said, Aziz. I mean, I think having our own, unique tech stack definitely differentiates us from the pack. I think we're one of the very few parties out there that has all three components: the DSP side, the SSP side, and the analytics to go along with it. So I think that we are very well positioned to continue to take market share as we've been doing in the last 3 years.
Yeah, and I can't say that enough. You'd be surprised how many big players don't even have any of this technology. And that is really what differentiates us and continues to, be the reason major publishers are starting to work with us every day on not only the Sabio side, but the Vidillion side and on the AppScience side. So we have the makings, we have the opportunities, and now it's just a matter of continuing to scale up these opportunities collectively.
Right. I mean, for you guys, it sounds like you just have to continue to build up on both sides. It's like continue to work with more content creators because you're probably also already getting the demand from the advertisers. Like, all right, we need more real estate. Like we want more, right? So is that one of the things you're also really focused on as well, is like developing more relationship with content creators?
Yeah, and I think it's simply, app creators and content creators, and we are not in a position, we don't want to be in the content game. We're simply giving them the technology to bring their goods to the marketplace. And that's really what we're doing. And our clients, the big brands, they want to talk to these people. They want to have a direct relationship and opportunity to interact with these people and know that when they get an advertising campaign, that it is running in places that they feel are acceptable, that they are brand safe. And I think that's really what is starting to separate us. And exactly what you said, there's a lot of content creators who are, we're being the conduit here. We have the technology to bring them to the marketplace. We're then connecting them to the marketplace, the folks who are in need of their services and being able to be in the right places. And so we're really kind of the conduit here. And we're uniquely positioned in that respect relative to a majority of those folks on that list that we get compared to. There's very few companies that have as much of a complete tech stack as we do. And I think that, to your point, we have the blueprint. We've spent the time and effort in building this infrastructure. And now we're seeing cost efficiencies with it. And so we believe that as we move forward, that's going to differentiate us, that we're going to continue to see some cost efficiencies, really focus in on cost management while at the same time grow. And we can manage those too, because we control so much of our own destiny.
Very good. All right. Well, I think we're there, guys. So where can our audience go and find more information to follow along the Sabio story?
Go to our website, sabioholding.com. And of course, you can follow us on our LinkedIn page. On Sabio Holdings LinkedIn, we are always putting a lot of great information and news out there. Quite honestly, we're going to be at a few conferences coming up in the coming months. So we're excited to get out there and talk to people. So please don't hesitate to reach out.
Very good. And just to reiterate, that's Sabio Holding, no S.com.
That's right.
We're going to talk to that person that got that URL, maybe,
Yeah, and we didn't want to pay the extra money. We're very cost conscious like that. We're just holding is quite okay. We're not going to pay whatever the price is. It doesn't matter. We're good with holding. We're
100%.
cost containment more than anything else.
100%. All right, guys. Thank you very much, and look forward to our next update.
Appreciate it.
Thank you.